Well, welcome, folks. Welcome to today's podcast webinar from Bob Benny Wealth Management. They're called podcasts in real life, honey.
Not this.
They are.
This
Yeah,
is
they
the
are.
webinar.
Anyway, welcome. This is January the 18th, 2024. Our topic I'm Bob Benny.
I'm Jesse Thompson.
And our topic today is how crazy is 2024 going to be? 3 ways to prepare. That sounds exciting. So we're going to talk about where we were last year in 2023 briefly, and where we are in 2024 and kind of our outlook, sort of what's going on, and what people can do to help themselves avoid getting sucked into the craziness that's going to be 2024, we think.
So as we're going through things, if you have any questions, you can type them in at the bottom of your screen and we'll address those at the end.
So let's talk about how 2024 went. It went better than most people expected, that's for sure. The stock market as measured by the S&P 500, which is the best measure probably we think of the broad stock market. It's the 500 largest stocks on the New York Stock Exchange. The S&P 500 was up 24% last year. In 2023, in spite of all of the negative news media and all the pundits and all the stuff they said, the earnings of the companies, not all of them, but by and large, the majority of the companies consistently, quarter by quarter by quarter, were outperforming the stock market analysts' expectations. Usually by 75–80% of the companies were outperforming their expectations. The economy was healthier than pundits and economists expected. According to one survey, 70% of economists expect 70% of professional economists. This isn't the news pundits that don't know anything. These are actual economists. 70% of the economists expected a recession in 2023, and we didn't have it. Even with interest rates rising to almost 20-year high on the Fed funds rate of 5.25%, there was no recession. There was positive economic growth throughout the year that was not expected, better than average, actually.
Mm-hmm. And for example, they haven't released earning numbers, and they haven't released the GDP numbers and economic information for fourth quarter of 2023, but third quarter of 2023, the gross domestic product was 4.9%, and an average that's good is between 2 and 3%. And so the economy was kind of rolling right along.
Yeah, and it actually did better. It did better in the fourth quarter than it did in the third quarter. So look at that.
So this is just kind of a reminder that we want to reiterate with everybody that just because somebody is an expert, just because they are a economist or a market analyst and that's what they do for their profession, that doesn't mean that everything that they think is going to happen is right. And there's a study that was done that we've shared on here before that talks about how often economists and market analysts or how often their predictions are right. And it's actually slightly less than 50% of the time. So they're wrong actually a little bit more than half the time. So just because you hear in some kind of a headline or a news article that so-and-so or economists predict this, or, that doesn't mean necessarily that that's truth and that's what's going to happen. So as an example, just think about how some of the best top economists in our country, the people who run the Federal Reserve, the reserve policy, were saying that inflation was transitory back in like 2021 after they had increased the money supply by almost 40% in 2020 in response to COVID. And obviously we found that that was not true at all. So that's just an example, but a lot of times, even given the same set of facts and research, different experts can come to different conclusions about what they think is going to happen based on the current facts that they have at hand. And so just keep that in mind, that nobody can predict in the short term exactly what's going to happen with the economy, exactly what's going to happen with the market correctly on a consistent basis.
One of the things that I get a kick out of sometimes is I'm looking at Yahoo Finance just for what the markets are doing, and then I'll scroll down on Yahoo Finance for the news stories of the day or the most recent financial news stories. And inevitably, you can find two news stories that are giving the opposite prediction. Market's going to go up because of this, or the market's going to go down because of this on the same day. And so, you know, in 2024, we're going to have some challenges and opportunities. It's going to be pretty crazy, I believe, because it's an election year, because our country's so polarized, and because the news media is so driven to get your attention, and that there's just going to be a lot of volatility. There's going to be volatility in the stock market, but I mean, there's just going to be a lot of just craziness, a lot of fear mongering, a lot of crazy, scary kind of news. But some things that we're confident are going to continue to happen is inflation. Inflation is going to continue to happen. Prices of goods and services are going to continue to rise. It's inevitable. No matter what the news media tells you, no matter what anybody tells you, the inflation is inevitable because of the increase in the money supply of almost 40% in the last 3-4 years. That causes prices to go up. The other thing that's pretty much inevitable that follows that is interest rates are going to continue to rise. I don't know if they're going to rise necessarily this year, because it's an election year and it's in the administration's best interest not to raise interest rates and scare people anymore. They may even move them down a little bit. If they do move them down, it's going to be a tiny amount, 1/4 point, once or twice, that's it. But after the election, interest rates are going to just keep going up, I believe, because of the inflation and because historically that's what happened. I could show you graphs of what happened the last time we had increases like this in the money supply and this horrendous inflation in interest rates. The same thing is going to happen, and it's inevitable. That we believe, and we've talked about this to you in the past at these other at previous webinars and people that have come into my office. I've been saying this for a few years now. The greatest financial threat to all of us worldwide is this super high inflation. It's going to be double-digit inflation. It's going to last for a while until things settle out. And there's 3 good places to have your money and 3 bad places to have your money when there's high inflation. And it's the biggest financial threat to everybody. The 3 bad places are in the bank, in savings and checking and money market accounts, because those interest rates don't stay ahead of inflation. They don't even keep up with inflation. I don't care if you're making 5% on the bank on your savings account. If inflation is 10 or 15%, you're going in the hole. CDs, same deal. They pay a little bit better interest rate than a savings account maybe, but not near as high of a rate as what the inflation is, and so you're losing buying power. And then the worst is bonds. Not only because bonds pay interest rates that are at lower rates than the rate of inflation, but because of the inverse relationship between interest rates over here and bond market values over on the other hand, you can't see. It's like a teeter-totter. As interest rates go up, the market values of your bond goes down. And so bad places, banks, CDs, and bad investment areas in high inflation, banks, CDs, and bonds. The 3 best places to have your money when you're in a high inflationary environment that we're in now and are going to be in for some years, the best place is companies. And it's logical, because if inflation is the rising cost of goods and services, what better place to have as a hedge than owning the companies that produce and sell the goods and services whose prices are going up? And it's not just logical, but history has proved that. Back in the late 70s and early 80s, when we had inflation like this before, before Jesse was even born. When we had inflation like this before in the late 70s and early 80s, the stock market outperformed inflation by about 8.5% per year. It was the best investment as a hedge against inflation. The second best category is income producing real estate like farmland or rental properties. They beat inflation by around 1 or 2% per year, beat inflation. And then the third is gold, and gold just stays about even with inflation, but it's still better than these three bad places to have, or bad investments to have during high inflation.
So the other thing that we want to talk about 2024 is regarding the stock market. And so we just wanted to show some perspective on historically how the stock market has performed during presidential election years. And it's kind of like how we talked about earlier, just because something's happened in the past doesn't mean that's how it's going to be this year, but also the past can provide us a little bit of perspective on how things have been and how they might be. And we talked about this also during a couple of years ago during the midterm election year. And what we had found when we looked at the performance of the stock market, we're measuring that by the performance of the S&P 500 during midterm election years, is that actually midterm election years are the most volatile and the most poor performing year of a presidential cycle. It's usually that midterm election year, which is surprising because you would think the presidential election year would be much worse because there's so much more uncertainty about policy and things like that. But it's actually the midterm election year that usually performs the worst across the entire 4 years of a president's term. So let's look at what has happened in the past.
But if I can interrupt, it just kind of goes to show you that there's so many things that affect stock prices and company values and that sort of thing, not including, but way beyond politics and what's going on that way. So go ahead.
So, whoops. So this chart shows the S&P 500 market returns between elections. So what this is measuring, the years that this is measuring November to November during these years. And so year one post-election, the average annual return during that year of the stock market is 8.3%, stock market S&P 500. In year two, that midterm election year that we just talked about is 3.4%. The post-midterm year that we just got done with in 2023 is the highest performing year typically during a presidential term, and that's on average 14.7%. And the presidential election year, year four that we're going into right now, is 9.1%. And just so you're aware, the average long-term annual return of the S&P 500 is somewhere around 9% overall.
So, because this is an election year, not just a normal election year either, there's more political, what do you call
it? Noise?
Well, there's going to be more political noise.
Polarization.
Polarization, more political, that's the word. Very smart, Jesse.
Sometimes.
There's more political polarization going on in our country right now than I've experienced in my lifetime since I started paying attention anyway. And I think most of you would agree that are watching, that are paying any attention in life, would agree that there's more polarization in our country regarding political things than ever before. And of course, that translates into the politics, translates into the news. And so just prepare, we're just advising people to prepare to expect political year shenanigans and all kinds of stories and news, and some of those things might rattle the markets, the stock markets temporarily, and just know that there's going to be this kind of stuff. So expect craziness. That's what we're saying, is to expect craziness. So how can you prepare? We're just recommending that you establish some disciplines in your life, if you haven't already, to protect your mind, your body, and your spiritual well-being. This will help you avoid not only financial stress, but stress in general, and avoid making any kind of investment decisions based on fear that could cost you a lot of money. So go ahead.
So we've talked before in different webinars kind of about the concept of market timing, which is when people try to get out of the market ahead of volatility or to avoid market crashes, and try to get back in on the way up, and how that doesn't work and how damaging that can be to a portfolio. And studies have shown that actually missing the best days in the market is more harmful to a portfolio than a market crash and staying in and staying invested through a market crash. And there's one particular study that we've talked about on this on these webinars before, and it was a study that was done over a 20-year, well, it was looking back at a 20-year period of the stock market between 2000 and 2020. And it had different scenarios of people's who stayed invested in the stock market during that entire time, stayed invested in like a S&P 500 index fund because it's measuring the S&P 500, and people who were trying to kind of time the market and get in and out of the market. And what was very surprising is that people who were timing the market and only missed 10 of the best days of the market over that 20-year period, only 10 days in 20 years, their returns of their portfolio in the exact same investments were 50% less than the person who had just stayed invested during that entire 20-year period, which included a dot-com bubble that was a big market crash and included the 2008 market crisis. All of that really scary stuff. People who just stayed invested during that were way better off than people who were trying to play the market and were selling based on fear. Yeah. And part of why that is that the best days in the stock market usually come right next door to the worst days in the stock market, when everyone is freaking out, everything's going down, and people want to get out and sell. Well, the best days that make a huge difference for your portfolio would be right next door to those days that people get out a lot of the time. So it can lose you a lot of money if you make financial mistakes based on fear.
Yeah. The investing on emotions, people always lose money when they invest based on the emotions of either fear or greed, because they cause them to make the wrong decision. Fear causes them to sell when they should be buying, and greed causes them to buy when they should be selling. So one of the ways that we help people is we don't panic. We look at information, we look at history, we use our education and logic to make investment decisions without panicking. And so, and we help kind of counsel people, hold their hands, so to speak, to try to help them not to panic as well. Am I ready for this part?
Sure.
So the first of the three things that, where are we at? The first mental or way to prepare for this craziness of this year is to work on your mental discipline. Let's say these three disciplines, and that is the way that we protect ourselves, protect your mind and your emotions, is to filter and limit your consumption of media. You know, back in the day when I was young, real young, still at home with my parents, you know, they watched the news, you know, half-hour news usually in the evening, and that was it. Maybe read the newspaper, but that's all it was. Today, and it has been for a while, you know, obviously we've had cable news on 24/7 for some years now, but now between the internet and social media and you know, cable news shows, we're just deluged with news every day. And so the amount of news, it can drive you crazy, as some of you probably already realize. It can drive you crazy because it's the same news over and over and over and over. And before you know it, the whole world's coming down and crashing on you, because the news is mostly selling fear or negative news. Negative news sells and fear sells. And so, I personally have, for some years now, managed to control and limit the consumption of news. I try to limit it to no more than a half an hour a day at the most. I never watch television, watch news on TV. I never listen to it on the radio. I only read it, and I only read it from trusted sources, and mostly read the headlines. And I get all the news. I get all the news I need, but I don't get enough news that causes me to panic or fear or get bent out of shape or out of sorts. I have enough for the facts to know what's going on. Anything more than that is just, it's like being brainwashed with this. If you let yourself get hear those same stories over and over and over all through the day by leaving CNN or Fox News or whatever on TV in the background all the time. We used to do that here in the office. We stopped doing that in February of 2020. I said, turn that off. We're not going to have Fox News on the TV anymore. All they're going to do is talk about COVID and how everybody's going to die and all that stuff. And so, so the first thing is to filter and limit media consumption.
There's this saying that reminds me of that I heard recently that really stuck in my head. That's, what you look at is what you see. And it's so true. It's like what you are looking at all the time and what you fill your mind with, regardless of whether you realize it or not, that starts to become your worldview, and it starts to become the lens of which you see everything through the world. So if you're always taking in like negative news or all these like catastrophic stories or things like that, or that the world is, such a mess and all this stuff, that's going to be how your outlook on life ends up being, regardless of whether you want it to be like that or not. It just like happens to you, and it's so true. So reminds me of that.
And it drives you to fear. News is mostly about fear. They sell fear. And my favorite Bible verse, 2 Timothy 1:7 says, "For God does not give us a spirit of fear, but of power and of love and of a sound mind." And so if you're fearful, there's something wrong. There's something wrong with your spirit, and God doesn't want you to be fearful.
And financially, we kind of talked about how, the news media can fill your mind with fear, but it causes all these different biases that can cause you to make bad decisions financially. There's something called a herding bias, which is basically when everyone else is doing something, you want to do it too. So if you see that all the stocks are going down and all these people are selling and all this stuff, that's going to be what you probably think that you should do too.
Yeah.
And there's just different things like that. And it also causes you to look at things and look at money in the market from a short-term perspective rather than a long-term perspective. And that's you're most successful looking at things long-term.
And, we tell our friends, our clients, our customers, and anybody watching this webinar, if you start feeling fearful about some news or whatever you read or seen in the news about what they're telling you that the economy or the market or is going on, and you need some counsel, give us a call. We want to help you. We want to talk you off the cliff, so to speak. And we follow this stuff just like you do, more than you do probably. Know more about what's going on with the companies than anybody that's watching this. And so we're here to help you. And we're here to help you not panic and not make investment or financial decisions based on fear.
Okay. So our next tip of how to prepare. So we're going mental, physical, and spiritual. So the next one is the spiritual or the physical discipline.
And so that's, exercising daily, at least 20 minutes a day. Go ahead.
So all of these tips that we're discussing are not just things that we think are like great life tips.
They're not great ideas. They're not
although they are, they're things that have been backed by science and studies that actually help your brain with decision making. Like all of these three things that we're talking about, all of these three disciplines have been proven in studies to help with the part of your brain. I can't remember if it's like the prefrontal cortex. It's something that's beyond my science range of knowledge, but it's a specific part of your brain that helps with decision making so that you can make clear, good decisions. And this physical one is one of those too. And so last year there was a analysis done of all of these different independent studies where they're looking at across all of these and finding, all the commonalities and trying to figure out, okay, what have we learned from all of these? And what was found from this analysis was that exercising 150 minutes a week, which averages out to be around 20 minutes a day, 20 or 30 minutes a day, they found that that was more effective for treating depression, anxiety, and stress disorders than psychotherapy or medications, which is absolutely crazy and really, really awesome. So not that those things aren't effective or that those things don't matter, but there's something that you can take into your own hands that you can do yourself by exercising that's so, so good for your mental health, not just your physical health. And it doesn't have to be something really hard. You don't have to go run sprints or like something crazy outside. It can literally just be a 20 to 30 minute walk a day.
Yeah. And the other thing, when you were talking about the three disciplines, the mental, physical, and spiritual, these are things that we do, that I do. And I remember back, particularly in February of 2020, when all the news all the time was about COVID and how everybody was going to get it and everybody's going to die and blah, 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 on and on and on. I decided that I needed to make sure that I was healthy, to take care of our customers, the people that trust me, for advice, to take care of my family. I needed, as a leader, I needed to stay healthy in these areas: mental, emotional, physical, and spiritual. And even years before that, though, I've been active for a while. My main exercise was playing racquetball 3 days a week. But long about mid-50s, I'm 63 now, long about my mid-50s, 55, 6, I realized that I was kind of going downhill, even though I played racquetball 3 times a week for an hour and a half to 2 hours each time, 3 times a week. And a friend introduced me to a book called Younger Next Year. And this book was written by a doctor and his retiree, that the doctor had prescribed to the retiree when he retired at about age 60. Had prescribed to him to start exercising every day, first off with just walking for 45 minutes a day. And so I ended up, I bought into it. The book was convincing enough, I thought I'd try it. And I started walking for 45 minutes a day on the days I don't play racquetball. And within 2 weeks, noticed physical results. I was having some pain in my knees, and that went away. But I've continued that, and it has helped me many ways more than just physical. But I can tell you right now that at age 63, I feel like, and I really think I'm in better physical shape now than I was when I was 55, when I was 50, probably when I was 40, maybe even when I was 30. I mean, I don't remember. Of course, I'm an old man now at 63. I don't remember, and I'm getting Alzheimer's, so I don't remember being in better physical shape than I am right now. But It works, and just walking 45 minutes a day can do you wonders. The book, like we said, is Younger Next Year. It's available on the Amazon. It's not real expensive or anything like that. But if anybody buys that book, and if you don't like it, let me know, and we'll stop recommending it. But no, I was going to say I'll give you your money back, but I don't want to put myself. I don't want to put myself at too much risk. But anyway, it's a great book.
Okay. All right.
And the third spiritual, or the third discipline of a way to prepare for the craziness that's going to happen, or the potential craziness that's going to happen in 2024, probably largely driven by politics and the news media, is to develop spiritual practices and or spiritual disciplines. So go ahead, Jess.
So this is another one of those things that has been thoroughly researched and has shown that having spiritual practices or disciplines that you do on a daily basis enhances brain function, and it also helps prevent cognitive decline in people. There's a study that we've talked about a few times that I've seen online, different places, and we've talked about at my church. There's a study that was done on people who read their Bible a certain amount of times per week, and how much the impact that reading the Bible specifically 4 times a week has on people's lives and marriages, addictions, things like that, is astounding. And they're just reading like 1 time a week didn't have nearly the effects that reading 4 times a week is. So again, it's kind of a thing that's a discipline that's done on a regular basis to be effective, whether that's, prayer or Bible reading or whatever.
Yeah. So, it helps give you a worldview that helps you realize that you're not the center of the universe, and that you are made for a purpose greater than yourself, and that life is bigger than what's going on in politics and our finances, etc. And folks, God doesn't want you to be fearful. He loves you. And I kind of think of the Bible like the owner's manual of my life. And I read it every day, study it every day, first thing in the morning, or darn near first thing after I get a little bit of coffee in me and awakened. And I was taught this SOAP process. It's SOAP, and that doesn't have anything to do with the deal, but this S stands for scripture, O for observation, A for application, and P for prayer. So what I do is I read a little section of the Bible. It might be 1 chapter, it might be 5 chapters. And then I pick out a scripture of that. I have a book, a journal book, and I just write down what that scripture was. I write it out word for word. And then the next thing I do is I write it, I come up with an observation about what I think that scripture says. And then I write down an application of how that applies to my life. And finally, I write out a prayer. And this has done me such wonders, and helps me start out my days on the right track, keeping in mind what's most important in my life. And it's helped me, I feel like it's helped me grow spiritually and grow closer to Jesus immensely. And so I recommend it to everybody.
So that wraps up our 3 tips. It doesn't look like we have any questions here, so
we don't have any questions, but we're here to help answer your questions about, for you and your friends and your family. You can send anybody you want to us. We're not going to charge them. We're going to treat them like gold. And we answer people's questions about their investments, that maybe their 401k at work. We help people figure out about retirement income planning, estate planning, tax strategies, anything to do with money. we're here to help, and we want to help you and your friends and family. So thank you very much, and have a blessed day.
Thank you.